Hi everyone, this is Daniel here. Welcome back to another project analysis video. Today it will be on the very anticipated PENRITH because a lot of my clients since 1 year ago in 2024 already stated their interest in waiting for this one. We've been keeping a very close eye on this, doing a lot of analysis and diving deeper. And when I was doing that, actually I've uncovered some concerns, my personal concerns about this project and the exit strategy, which I will be covering today. My number one concern for this project. I won't go into the basic facts like developer all this. I think these are all very basic information that everybody can find online. So let's dive into the main factors. In fact, for my analysis video, I will break it into two parts. I will cover in part 1 these two over here, and then in another separate video I'll talk about the layout comparison. So subscribe to my channel and look out for that one because I think that one is very interesting and very good to pay attention to. One of my main concerns for this PENRITH, right, is whether it can stand out in the competition next time when owners are trying to exit. What do I mean by that? Because you see, actually there's a few factors, so I'll go through them one by one, namely the location. And then also, you're talking about the land size. How does it stand out compared to the other projects in terms of visibility, in terms of appearances, facade and all that, right? So, one thing very important to note is that because in this area itself already there's a few condos and they're all quite close to the Queenstown MRT, pretty similar location, right? So if you are going to launch there, technically you're the newest, but can you really command that premium in the future when you want to resell? Why? Because Commonwealth Towers is about 7-8 years old, Sterling Residence currently is about 3 years old, so they are not exactly very far off or very much older, right? In fact, usually people don't mind going for these kind of properties at a lower price. So it's very important to analyze to see whether is it really worth paying that premium for something brand new. And in fact, from this map, you already can tell one important concern. Why? Because you see, compared to the rest of these highlighted projects here, right, actually PENRITH is quite a fair bit away. And I'll go into more details later. Now, a quick introduction about the projects nearby to see the performance, right? Commonwealth Towers, UP 2017 per annum annualized gains, you're looking at 3 to 4% for the smaller types, and then the 3-bedroom and 4-bedroom, you're looking at quite a substantial amount of gains in the last 7-8 years, right? The 3-bedder can even hit $1 million profit. It's quite a drastic difference because the 3-bedroom here, you are able to see larger annualized profits. And later I'll explain why. For Queen's Peak, so this one, it's quite well known that the layout is a little not so ideal compared to the surrounding projects. I won't go too much into detail for this, but you can see it in the results, whereby the smaller units, you're looking at a smaller annualized gains, 2 to 3%. Still quite healthy profits, but you cannot really compete with the other projects. For the smaller layouts, the floor plan, the layout difference is quite obvious. That's why the profits is much lesser. But for the 4-bedroom and 5-bedroom, actually you still can do quite significant profits. Okay, for Queens is quite noticeably older, so currently probably around 23 years old, right? So this one, depending on when you buy, I took some of the transactions that only took place about 7-8 years ago, didn't do very well. Probably because it's significantly older than the rest already. So this is something that you want to pay attention to also. Like if you want to get something older, maybe don't get so old, right? People still want something decent condition, novelty effect kind of thing. But at least good thing is that the 3-4 bedders still can have a 4 to 6% annualized gain for those who bought about 7-8 years ago. And finally, the newest kid on the block, Sterling Residences. So this one quite healthy, right? 4 to 6% over the last 6 years and about 4 to 500k profits. The 3-bedroom and 4-bedroom is fantastic. It can go up to 600k to $1 million for the 4-bedroom. I think with this we can spot a pattern here whereby the larger the unit type, the gains are also better, not just in terms of absolute profit, even the annualized gains tend to be bigger. So why is it important that we need to see whether PENRITH is able to stand out? Because this is just a very recent screenshot from Property Guru. Look at the number of units available to buy and to rent. Sterling Residences to buy already 100 units at this current moment. Commonwealth 48, Queens 8, Queen's Peak 45, right? And then for rental, Sterling's 33, 35 here, 23, 34. So all in all, this is not a low amount of supply, definitely. And next time when you TOP, when you want to resell, when you want to rent out your unit, these are the people that you have to compete with, and this is the supply currently. So a quick look. how many 2 bedrooms are available for sale right now? Take a moment to do a quick guess and then I'll show the answer. So for Queen's Peak alone, there's 7. Sterling Residences, there's 64. And then Commonwealth Towers, there's 9. There's easily about 70 to 80 units of 2 bedrooms for sale right now. Would that be an issue next time? Let's say you're investing in a 2 bedroom, next time you want to sell at TOP and actually you're really banking on exiting at the TOP stage, right? Will this be something that will affect your strategy, your exit strategy? I definitely think so. And I think that for all investors looking at 2 bedroom, you must be prepared for this situation where you may need to hold. How long would you expect you need to hold for? This is not a 100% precise way of calculating, but I think it's generally quite helpful and has some logic to it, which is currently, for example, there's 80 units on the market for 2 bedrooms, and I'm able to see, like on average, how many units of 2 bedrooms are sold a month in this location, which you can see, right? For here, it's actually 10, here's probably around 8, and then 6. So thereabouts, let's say you are looking at about 8 units a month, which means that approximately 10 months is required to sell a 2 bedroom unit. Of course, there's different factors like pricing, how competitive your pricing is, how attractive your pricing is, maybe layout, or how desirable your particular unit is, like in terms of facing, how high, what kind of views are you enjoying, that kind of thing, right? So with all of that coming into the picture, maybe if yours is one of the best units over there, best price, everything, maybe you can expect to sell it in half the time. So that's why you see there's this observation on the ground now where smaller unit types do take longer to sell, whether it's a 1 bedroom, 2 bedroom. This is part of the reason why. Or you can use this way of research, right, to understand better how long you might take to sell your property in the future, whether there's competition and whether it's really a concern for you or not. Now here's where it gets really interesting, right? How about for 3 bedroom and 4 bedroom? So for 3 bedroom, the numbers are significantly lower. 3 bedroom, now only 12 for Sterling Residences, 10 for Queen's Peak, and then 8 for Commonwealth Towers. Of course, some of these might be duplicates also, right? So easily about maybe 20 units on sale. But here's where it gets super interesting. For the 4 bedrooms, Sterling, there's nothing. Commonwealth Towers, also nothing. Only Queen's Peak, actually only effectively 1 lah, because the other one is actually like a 3+ study kind of thing. So they listed as a 4 bedroom, but it's not really true. This is the only 4 bedroom and it's got a pretty good view and everything. Look at how much it's listing for. And it's going at 2005 PSF for Queen's Peak, right? It's about 5 years old right now lah. So you're starting to see the pattern here of the larger the unit type, yes, because the supply is lesser to begin with, right? And in fact, when on the resale market, the supply available also is lesser. So for those people who are looking to buy at least, something that they are planning to have for own stay, they cannot wait for the new launch to be ready, so they cannot buy new launch, right? So they have to buy resale, and they love this location, for example. So these HDB upgraders, they have no other options already for this location, and that's the reason why the pattern is quite clear. Sterling Residences, I'm using the same example here, and that's why the pattern is very clear. When it comes to your 4 bedroom, 3 bedrooms, they are all very strong. The data is displaying average amount lah, but still it's quite clear. See, for example, Sterling Residences, 1 mil, right? Or Queen's Peak, you have 700k to 1 mil. For Commonwealth Towers, 3 bedroom, 600+k, 4 bedroom, 700k. But this one is actually kind of lagging really the data because the last transacted was 2024. By now, if you want to sell a 4 bedroom, I think you can easily go for maybe 800 plus or even up to 1 mil kind of profits. You definitely can try. But what's the important thing to take note here? Sterling Residences, 3 bedroom, 4 bedroom is already at $2,400 PSF. Even Commonwealth Towers, actually there are transactions that accepted $2,500 PSF, and these are all non-harmonized. So non-harmonized meaning they are going by the older calculation where they count the balcony spaces into it. So technically the PSF, if we compare to a harmonized PENRITH, it should be higher. So for example, if I were to prorate it, right, this one probably will be about, if I add another 6-7%, probably 2.6x worth. And then this one definitely can sell for higher lah today. But let's say it was based on a 2.5 also, right? Then definitely you're looking at 2.6 to 2.7 already. And for Queen's Peak, the layout, as mentioned, it's not the best, and that's why you can see it also in terms of the PSF, it's slightly lesser than our counterparts over here. So we see floor plan, the layout, right, it is also very important. In fact, just a quick look at what's available in terms of the 2-bedroom supply, right? You can see that the competitors are not so shabby themselves. For example, this Sterling Residences one, amazing views available, Queen's Peak here, and then this one is facing another building, not as fantastic, right? But at least we have a better idea now. The next thing that we need to assess is the level of risk in terms of rental, because once again, if let's say you really want to get a 2-bedroom here, and let's say you're not able to sell it off so quickly, you cannot realize your desired amount of profits when it's time to TOP, then you have to rent it out, right? So what is the level of risk involved in terms of your rental strategy? Important to note here is that in general, for a 2-bedroom at current prices, that means current sale prices and current rental prices, the rental yield, right, is already very risky to me. Why do I say so? Is because if you're buying at these prices today, next time when you want to sell it for higher prices, will investors be willing to buy this unit from you? Because if you are selling at a higher price next time, let's say 2 million, 2.1 million, let's say, assuming the rental doesn't go up, your yield will drop to, let's say, like 3%. Will this be attractive to the buyers? Why can't they go to somewhere else more central where they can enjoy 3.5%, 4%? So the pattern here we can see is quite clear, that in terms of if you're buying it just to rent out and then to flip for profit in the future, this may not be the best choice. And this is based on the current prices at respective projects here. So that may also be the reason why the units here are not moving as quickly as they would like. So why these figures are important to take note is when PENRITH launches the 2-bedroom units, we have to use these numbers to judge whether the rental yield will make sense for us as an investor or not. Usually if it's below 3.5%, I don't think it's a good idea anymore, unless for some reason, you have emotions involved in the purchase also, and you also maybe want to stay there for yourself, right? And you don't mind this, then I cannot say much about that. But from a purely investment point of view, unless we can see that the rental yield is going to go up in the future, maybe there's new schools, there's new malls, there's obviously not going to be MRT, right? So I don't really see a huge upside in terms of the rental yield, and therefore, unless PENRITH launches at a very good price that can bring your rental yield up above 3.5%, to me, I wouldn't go for this. I'm so sorry to say this. Okay, now we look at for the 3-bedroom assessment, Sterling Residences as an example, right? Because they have quite a number of different layout types for 3-bedroom, right? So let's say 8 to 900 square feet rental, 6,500. Current market price about 2.2 million. Of course, if you can buy 2 million, then fantastic, you can go for it, right? But based on this, hey, at least our rental yield is about 3.5%. It's a little bit risky already, it's a bit pushing it. But the plus side here is that we know that the demand for 3-bedroom and higher, right, actually is quite good and quite strong. So you got to be aware of the risk that you're taking here, whereby you're sacrificing a little bit in terms of the rental part in hopes that your capital gain is able to make up for it in the future. Even more importantly, for us to take note here is this. For the 1,055 square feet 3-bedroom, last time the rental was easily 7,000 thereabouts. But when I look at the recent transaction, actually the average probably around 6,500 only. And prices are going for about 2.6 million thereabouts. So based on this, right, actually the rental yield is really quite scary. If I can say so. Right? For this one, the strategy will be still the same. You bank on the capital gain upside and not so much of the rental. But why I always talk about rental personally, I feel that is because in bad times, when market is doing not so good, whereby prices maybe they come down a little bit, right? Maybe you're not able to exit at the desired price that you want, right? So you're forced to hold. When you're forced to hold, maybe you would resort to renting it out. But if the rental yield is not good, right, there is a chance that your monthly outflow is going to be quite painful. And that is something that I really hope for at least my clients to avoid these kind of situations. So that's why in general, actually you want to go for at least 4 But of course, we know that nowadays it's not easy to get these kind of numbers anymore. And that's why I feel that the bare minimum now, you need to be above 3.5% to be safer in the current market. Okay, and even more interesting, right, for 4-bedroom, using Sterling as an example, 3.4 million, rental 10,000, actually the rental yield is about 3%. 3.5%. So sterling, if you can get below 3.4 mil, actually can buy that. I think it's actually not bad lah. Actually, based on what I share so far, I think it seems like sterling resistance is quite decent, right? And I think there are some reasons as to why. Okay, on to my next point. Can PENRITH stand out compared to its competitors in terms of land location and size comparison? When I say location, I don't mean like near MRT or whether it's a central location, that kind of thing. Now it's a bit more micro already. So in terms of the location of the project, here is PENRITH. First thing you notice already, surrounding plots of land. You see here is 3.5 plot ratio, this is 4.6, 4.9, 4.9, 3.3, 3.7. So while yes, PENRITH is a bit higher than some of the surrounding ones, but there's also others that is actually higher. Actually, they're all quite considered like skyscraper kind of heights lah. So it doesn't really stand out in that sense. Second thing is, how noticeable is PENRITH compared to its competitors? The only real way to see it in a very obvious manner, right, is if you are from this side of the map, right, when you're looking towards here. And also this means that PENRITH on the higher floor, when you're looking towards that side, right, the top right corner side, you're gonna have a very nice unblocked view lah. But I would say that this road, right, probably is not exactly very heavy, not like this road near the Queenstown MRT area, right? So in this sense, right, when we compare to the other projects that is nearer to the main road here, which one would be more noticeable? And that's where I feel PENRITH kind of fall short, because it feels a bit hidden away. So what do I mean by that, right? To further illustrate my point, so PENRITH will be somewhere around here, and yes, here is fantastic views. But can you see the road from which people can see actually is probably from here, here, or here ma. But from here, right, if you're coming from here, actually it is really being blocked by all these taller buildings all around it one. And even if you can see, actually it doesn't really stand out. You will have a hard time standing out. The good news is that definitely for PENRITH, the views here will be quite nice lah. Now to give you another visual from the main road nearer to the MRT, when you're driving past, right, you can see that probably PENRITH is somewhere around here. So you see, you're surrounded by all these buildings that are quite tall already. PENRITH is not like it's double the size or anything, and most probably for most of the angles you're going to be blocked as well. In fact, let me show you a good example using sterling, and maybe this is part of the reason why it's able to perform so well also. Now for sterling, it's a little bit similar to PENRITH in the sense it's not really by the main road, it's also further in a little bit, right? But you'll notice, right, that the land here actually is all the low-rise one. So when you're traveling along Alexandra Road, even downwards, right, actually you'll find that it's just these 3 blocks just standing right there staring at you. And yes, there are other taller buildings also, but they are actually a distance away. So you can see that it really is able to have a presence. And that's exactly what I'm trying to say, that for PENRITH, right, like if it's just standing over here like that, when you're driving past here, you're not really able to notice it. Alright, so now we talk about the land size comparison. PENRITH is about 102,000 square feet in terms of the land size. That doesn't mean that it is small, right? I think it's kind of the bare minimum. But once again, it's relative to the competitors around it, right? So Commonwealth Towers, 130,000. Queen's Peak, 113,000, and look at sterling, double the size, 227,000. When it is that kind of size, definitely the feeling is different one, because let's say you're standing on a big piece of land, you can see how wide, how impressive, you get the wow factor. Definitely is a different impression on buyers. For PENRITH, because of the land shape and everything, I think it's still quite not bad in the sense, you see the development spacing, right, it's quite good lah, still very comfortable. Even if you buy the inward facing one, you still have a nice view and everything. And because it's so-called elongated in terms of the layout, right, it still will probably give a pretty nice feel. And they still managed to find some space for this tennis court, right? So in terms of impressiveness, also probably, sterling is stronger in that sense. That's why I feel that in all of these aspects that I shared, then I think that the pricing for PENRITH is even more important that we analyze correctly. And that's why with all the factors that I just mentioned just now, the location of the land, is it able to stand out compared to its competitors? The rental risk assessment, all of these combined together already shows that PENRITH is going to have certain challenges in terms of the exit strategy in the future. And that is why I feel that the analysis of the layouts and the possible pricing is even more important at this point of time. So today we have covered for PENRITH several important factors as to will it be able to compete and stand out against competitors in the future. And we've covered the location of the project, we've covered the rental risk assessment, and we've also understood for this location what kind of unit types tend to perform better, and actually is it much more better, right? And that's the reason why you can tell from this video that PENRITH seems to have certain challenges in terms of the exit strategy. And that's why I feel that it is even more important that we must analyze the layout and also the potential pricing even more carefully, so that you're very clear what are the price points to enter safely and what are the price points that is a clear no. So remember to subscribe to my YouTube channel, and I will cover all of that in depth in part 2 of the PENRITH analysis. See you then.